We're going to be talking about the most pressing and contentious issues between CTOs and CIOs and their non-technology executives who hold the purse strings. So this is the chance to let it all out. I'm going to introduce our speakers one by one. Alexey Buditskiy, am I pronouncing that correctly? You pronounce it for me. Investment Director and CFO for Amoo Venture Capital Advisory. Next is Greg Dowling, Managing Director, Global Head of Solutions and Functional Architecture, Global Banking and Markets for RBS. Simon Goodman, Chief Technology Officer for Marshall Wace, and interviewed once again by my colleague Svensson of Enterprise Products and Solutions, Strategy and Business Development. Thanks.
Thank you. Thank you all for hanging in there after lunch here, and thanks for the panelists for joining us here. The financial industry is finding itself in an unparalleled situation of disruption, where we feel the increased regulatory pressure and lower profitability, possibly leading to a underinvestment in technology. Greg, can you tell us a little bit about, to say, your present situation? What is it to run IT at the moment?
Well, I don't run IT, I'm delighted to say. Stephen Norman, who was on stage earlier today, does. I think, though, it's a very interesting situation. There's a recent McKinsey's report that says our industry is going to be 50% as profitable as it used to be. And for me, that means a major change in the way we do what we do. I think so much of the way the investment banking IT industry has worked has been about time to market at the cost of almost everything else. It was about getting that product in the hands of the customer faster than anybody else. And if that meant compromising efficiency across asset classes, quality of engineering, then in many cases that made sense. And most of us are organized around that as a concept. It seems to me that with the capital changes and everything else changing, that doesn't make sense anymore. And so that makes it a very major disruptive period.
Yeah. Simon, how do you feel?
I think it puts enormous pressure on the technology area to make sure that that it continues to focus on very much driving down the running costs of the business, so that it can free up as much investment and capital as possible to basically reinvest in building out the platform. But it's what with the regulatory hurdles that we're all having to jump through, it just, again, with the economics, the period that we're running through, it does put an almighty pressure around margins of running that business and forces us to very much look at every piece of spend and really objectively assess whether that's the right thing to tackle or not.
Alexey, you're coming from a completely different part of the industry. You're coming from the outside, and you're investing in young new technology companies.
Well,
what can we learn from that?
It's the best period to invest. If you know, recently the new tech cluster peaked in London, and there are more than 1 million people already in this cluster from around 30 companies last year. So the market is growing. There are lots of opportunities, and for me, it's a big surprise to know that banks actually are struggling with this current situation. I think it's the best time to invest in technology, and the sooner you invest, the higher returns you'll have, the more opportunities you're going to have.
Yeah, great.
I'd certainly agree with that. One of the most interesting conversations I've had in the past few months was one of our heads of the prime brokerage businesses. And we were talking about what technology ought to be like in an investment bank. And part of the thought experiment was sitting there for a few minutes talking about what would our industry look like and what would our systems look like if Google had designed them in the last 3 years. And I don't think they'd look anything like what we currently look after. But clearly that would be much more cost efficient, much better placed for the challenges we face. And somehow we have to get there, because whoever gets there first will have a huge advantage over everyone else.
Yeah, let's come back to that. Alexey, you have 3 assets of values that you wanted to...
because I had experience in valuation of businesses and financial companies. So there are 3 major factors which create the value for the bank. They're the first one, clients. The second one, people or employees in the company, and the third one is technology. So if you remove one of these pillars, it could destroy the value of the whole bank. So if you reduce cuts in technology now, okay, it could be shown profitably in the short term, but in the long term, in the medium term, it could destroy the value. So it's very important that companies will have investments to create a significant competitive advantage now, because otherwise it will be too late, unfortunately, for the future.
Yeah, I think we heard it from the last speakers. Now's the time to do it and time to be different. Time to
I
be bold.
agree with that. That was actually a very good speech.
Yeah.
I think that's right, because from an investor's perspective, within the hedge fund space, they're not very much looking for an operational platform and infrastructure to attract that institutional capital. But unless you actually invest and generally build a very sustainable business model, you don't actually stand a chance of entering into that game.
Picking up your point, Alexey, I heard the CEO of my business, Global Banking Markets, say, it was to an IT audience the other week, that this is a technology business around which we put people and capital. So it seems to me that at some level our leaders get it.
That must be wonderful, right? What are you complaining about? I mean, if you have somebody telling you to say that you should invest in technology, we are all around you, right?
And that's absolutely fantastic. Obviously,
but how are you going to deliver? How do you do that?
Exactly. And part of the problem, I think, is at that level it's understood. But immediately beyond that, we're then into, under him are people who are organized by asset class, who are used to doing things in a traditional way. And how we respond to that is a huge challenge, I think. It may well be that that's the top level vision. But it's almost like the sort of technology structure you need under that, the organizational structure you need in the business, and honestly, the installed technology base, none of that is what we really need, I think, to respond to that vision. And so part of the problem, I think, is the one that a lot of people are talking about, is with this legacy cost and with this run-the-bank cost, how do we make these great leaps, especially in businesses where the profitability is now challenged?
So you're going to ruin his day by coming back and telling him to say that well, we can't really live up to that because we have this legacy platform.
Well, I think my job is to try and help make that happen, but I think my job is quite hard.
Yeah, we wish you luck, right?
Well, that's very much the job of the CIO, CTO to actually educate the board or the executive management suite into making those decisions and being able to articulate the arguments as to why certain investments need to be made to build out that long-term view.
Do you have a similar challenge to say, Marshall Wace has been around for a while. Do you have legacy infrastructure as well?
We do, but fortunately, Marshall Wace has always recognized the value of technology, and that's partly how our principal strategy TOPS was born from. So we are fortunate in that regard. However, there's still, I think the challenge of the role today is very much to be able to actually deal with all of that legacy infrastructure, minimize the longer term spend it's going to naturally attract if left unattended, as well as delivering a very efficient, controlled environment and platform on the back end, but yet still delivering to where the actual business's critical success factors are, and making sure that technology is very much aligned to what the business needs to achieve from a strategic perspective. Okay, so it's the balance.
Going back to your three assets, we've talked a little bit about technology now. What about the people? What can we learn from the world outside?
About people. So if, like, normal employee will go to the office, he could feel that there is regressive attitude towards technology. So it's kind of operate, nowadays machines in a digital world. Who is going to do that? People need and employees need more innovative, more user-friendly and social-oriented mobile technology they can easily understand. So why we will teach people for a long period of time how to use these particular tools, if we could create quite simple, transparent technologies which will be user-friendly and very cost-effective. So, like, take an example of Asana, which was created by one of the co-founders of Facebook. They created absolutely amazing project management tools, which could be used by everyone without any training, and they're quite popular at the moment. So why we don't do that?
Mm-hmm. Greg, do you have any comments?
Yeah, I mean, I think if I look around, it seems that the whole industry has spent so much money shuffling one ill-formed data format into another ill-formed data format. And every project you look at that's calculating complicated credit risk or sophisticated market risk or everything else, a very large portion of that project budget gets spent shuffling the data into a format you can actually use, and then you can do the creative thing with it. And as I look around the organization and I see energetic, creative people shuffling data around, there's something wrong. So there's a piece of plumbing, I think, that needs to be done. And I was very interested to hear some of the discussions earlier about sort of FIX protocol. You know, FIX does an absolutely fantastic job in a small part of our estate. But you know, when we talk about talking to regulators, doing reporting, affirmation platforms, even trading outside the equity area, we see kind of lots and lots and lots of data chaos. And it seems to me that somehow as an industry we need to solve some of that, because all of us spend so much of our money and waste so much of our intellectual capital shuffling stuff around.
I think that's right. I think particularly if you look at OTC swaps, more complex instruments, we are crying out for someone to actually come up with a standardized set of solutions to these things. I know if you look at swaps and you think about what Triano are trying to do, or whether it's Omgeo in the OTC clearing space, they're clearly trying to grapple with that very problem. But whilst it's out there, it does mean that if you want to actually solve the inefficiencies yourself, unfortunately, you are likely to have to create much more bespoke internal proprietary technologies.
And I think there's no competitive advantage in that stuff.
Yeah. Technology is supposed to be a competitive advantage, it doesn't create. That's the whole point of our conversation, actually.
Yeah, well, I think like coming back to that theme later on, because already has been talked a lot about. The final
the final
piece is that you're cutting it.
So because we have investors as our customers, so apparently for them will be it's very important to have very transparent and again user-friendly system, so they can understand the technology, they could understand the system, so it will affect them to invest in this technology. If it's very complicated, if it's a very sophisticated system, so we will finally lose our customers. And technology should interact with customers, engage them. So this is my view, actually.
Yeah. Greg, who's your customer?
Well, actually, my customer are the sort of intermediaries. So I think speaking personally, I find it difficult. But I think we're all. I mean, we are all customers of the banks, and by and large, I think when we talk to our friends and colleagues, we don't brag about how fantastic the service we have from our banks is and how easy it was to manage our investments and what a delight. I don't see people showing each other on their iPhones, the fantastic investments they just made. So it seems to me that an awful lot of the customer service technologies that the more innovative internet vendors have done, especially in the retail space, are missing from our industry. And we need to remind ourselves, especially after maybe the credit crisis, that an awful lot of this is about linking people who make pension investments and make other investments to people who need that money to make businesses grow. And somehow there's some links there that the industry as a whole needs to make, it seems to me, merely as a customer rather than somebody working in a small section of it.
In the hedge fund industry, we have the investors, right? Are they really only worried about the returns, or do they care about the infrastructure?
I think
what sort of engagements or plans do you have to please the investors?
I think historically the number one desire was really around return, and I think increasingly in this climate it becomes much more one of the sustainability of the business model in question. And from a technology perspective, what we have to do is to be able to demonstrate a very good grasp of operational risk and the fact that we can actually minimize that risk and actually demonstrate a very sustainable and viable business model and platform behind that. It's interesting to think about the consumerization of technology that you're alluding to, and I think again, in this industry, as the consumers are actually very sophisticated pension funds, endowments, institutional clients, the consumerization theme isn't really terribly applicable at this juncture. So our role is to actually make sure that we can be as transparent as possible and show them in depth analysis around their experience of the performance and experience with the actual firm through very good reporting and demonstration of the systems and platform in question.
Yeah.
But it's not actually delivering that onto an iPhone app for a pension fund investor is probably not what they're actually looking for.
They're not, right? Okay.
So I think that's absolutely true. But if you go back to the sort of heady days of the sort of internet bubble, we were seeing people like W.R. Hambridge trying to sort of disintermediate the entire investment banking industry by allowing investors to invest in startup companies directly. It seems to me there might still be some mileage in some of that, and the industry isn't organised maybe to take advantage of it, but there's still possibly some sort of disintermediation opportunity around some of that, I think.
There could be, but that might just be a different segment of the market. And there's a real question about how does the industry get close to that end consumer, and the way that the regulators have got it established, it's very difficult to see how that can break down anytime soon.
Let's talk a little bit about the CTO role. In a cost-cutting mode, some CTOs might end up, so to say, sort of be regarded as, from management as a cost center, and they're perfectly happy just by you live there in the corner and you keep the lights on. But that's not really going to work in the future environment or the positive environment of investing, right?
Yeah, so for us, we believe that it's a huge potential for all CTOs. So the most promising companies are going to have CTOs. They're going to have more and more of these people involved in the business. But my belief that CTO will be more savvy, business-oriented. It will include in this role certain levels of chief risk officer responsibilities, chief learning officer, and chief information officer. So it's going to be very key, but at the same time very innovative role. And the question is that where the company will able to find these bright and innovative people who will be kind of equal partners in the company. So this is my view actually. So I have very positive outlook for all of the CTO role in the future.
Yeah, one of the traders I was talking to was telling me he thinks his next boss will be a guy who works in technology. I think sadly it probably won't be me, because I think a lot of us have grown up seeing technology as a service industry around the rest of the business. And I think what you're describing, Alexey, is much more of a technology-savvy business leader. And so I think but those technology-savvy business leaders are not going to be happy reporting to the COO, who reports to the CFO, who reports to the head of logistics and control. Amazon probably don't run their business that way. Yeah. And so I think the way who these people are perhaps needs to change, but also the way that they plug into the broader organisation also has to change.
How do you make that point across to the management?
Well, I probably need to remind my CEO of this recent quote and suggest the CIO has a tough conversation with him. No, I think it's tough because those are tough changes to make, and if it were easy, it would be done. Right?
I think there's a big shift going on. I concur with a lot of what you're saying. I think historically, the person running technology for firms has, unless it's been a technology-related business, certainly within financial services, I think has been very much looking at efficiency and infrastructure, and has always been perceived as someone that should be managing the costs of that particular part of the business extremely well. I think it's evolving to a much more strategic voice within the senior management of organisations, and that's partly to ultimately drive strategy through, to use technology to drive that through, but also to bring themes going on and products and innovative solutions out there that can actually be applied to actually change the business model itself. You're certainly seeing that outside of the financial services industry, but it's gradually moving away from that total focus around the keeping the lights on and everything running. Not that you'll actually have the opportunity necessarily to be talking strategy and directing that if you haven't actually delivered on the basics. But that's the evolution going through.
I think one of the things that's interesting here is I'm not so convinced that what needs to happen and what needs to happen in our industry is fundamental technology innovation. It reminds me a little bit of the early days of Apple, where all of Apple's good ideas had been done 5 or 10 years previously by Xerox PARC. And there were a lot of jokes about what are we going to do when we run out of Xerox PARC's ideas. Now, in fact, the industry's found new things to do, and it's been fine. But I have a feeling that an awful lot of the innovative things that are needed in our industry are already there, being used in other sectors by other people. A lot of the retail stuff, a lot of the prospecting of customers, a lot of the sorts of things that Google and Amazon are doing have a natural place in our business. So there's an awful lot of mileage to be gained by just taking those ideas and using them in the right places, I think.
Yeah. Go ahead.
Yeah, so I would have this point. I completely agree with this view. And for example, there are like probably millions, not maybe thousands, of very innovative startups, companies with very interesting ideas. So I think at the moment there is a point where big companies could create corporate ventures and invest and get these very good ideas, so they could have competitive advantage in the future. If they manage to get it now, again, I mean, they will secure the position for the possible future. That's definitely a very good point. I agree.
We talked a little bit about inefficiencies, and the other groups have been talking about that as well. Like what do you see? What do you think is going to be, sort of say, standardized and maybe coming together in communities rather than all of us sort of reinventing the wheel constantly? Are there any specific functionality and specific platforms you mentioned, to say, swaps and OTC trading and clearing? I mean, is there anything else that's out there that's low-hanging fruit that we should go after as a community and possibly?
I mean, I think there's an awful lot of the operational processing in our business that doesn't make money for any of us. It's a cost, it's complicated, it's difficult to run. It needs to work, and I enjoyed the comment earlier about you outsource the processing, but you don't outsource the risk or the responsibility. So I think there's a lot of opportunity there. The industry and our providers, I don't think, have been particularly good at that. You would think that with all that was learnt in equities about the fixed protocol, when we exchangified the bond market, we'd use the fixed protocol. But did that happen? No. Because people thought there was a competitive advantage and our protocol was better than your protocol, and there were API wars. The net result is it's taken very many years to do that. So I think there's a lot of things that could be standardized, and I think with the swap industry, one of the interesting things is if the clearing houses have a picture of all your swap business, then I'm sure there's a lot of extra services they could offer on the back of that, possibly very efficiently. So I think there's a lot of opportunity around a lot of parts of our business that are not genuine competitive advantage. How that will happen and whether that will happen, though, I think is a very open question based on history.
Yeah. Who do you think the players are going to be that that's going to help and bring that together?
Well,
are there any specific players out there?
I mean, I think all the exchanges and the clearing houses clearly have an opportunity there. I guess all Bloomberg probably have an opportunity as a supplier across the industry to help some things happen there.
Yeah, I was going to say, particularly around market data, there has to be opportunity for consolidation and pricing and standardization to actually make that whole area much more effective from a consumer's perspective, because the complexity of what we're receiving and having to develop around, the pricing disparity and complexity around the whole area, I think is enormously difficult to contend with when you've got ever expanding scope of products and that you're trying to deliver to the end client.
So one final question. Here's your opportunity now to ask your upper management, for a little bit more money to buy what, or to implement what would that be?
Okay, great. Well, I mean, a bit more money would always be nice, of course.
Nothing for free.
I think the most important thing we could try and do is to try and reorganize around customers and technology functions instead of asset classes. I think that could really drive some of the innovation we need with proper partnership with the business. I think that would be a great help, certainly in my area.
Yeah.
I think if we had a little bit more budget, then I'd be asking for to actually create more capacity for innovation and creative thinking, to actually specifically sponsor the time that's required to actually allow a little bit more freedom and creativity in terms of actually going out and exploring what's available in the market, different trends coming through, and actually really creating a structure to support and drive innovation. Because I think it's the one area that could make an enormous difference over time to the business, but one that is, as a general principle, probably underinvested in.
Sure. Alexey,
Yes.
do you believe them? If you were the manager?
Not really, to be honest. Not really. It sounds like if I had a budget, then I would do that if I had, etc. So I believe that the key point is we should judge technology as a value creator. That's the most important thing. And until management understand that this is the key for the business, nothing will happen. They need to understand if they lose now, they're gonna have serious troubles in the future. That's the point. So it's from a strategic point of view. That's essential.
Kevin, do we have any questions from the audience?
I have two questions, and one is a perfect segue. It says, underneath the banner of Memo to Management, it's obviously not working in many companies given the cuts. Is there any way you could use, this is to Alexey, any way you could use the metrics that you use to make investments to help the other two fellows, buy and sell side organizations, communicate the value to our management?
So it's again, this metric will be probably transparency and openness and user-friendly environment. So,
but you have a way to measure the return on technology investment that would allow the buy side or sell side managers.
It's not about return all the time. I'm telling. It's more about value creation. So sometimes it's very difficult to measure, this return immediately. It will be in the long run. So I think I'm telling you that there are metrics, but they're more strategic and long-term oriented. So they could capture value for the future, probably.
There are some metrics which you can apply, which are much more tangible for certain initiatives, where perhaps that's been very clear saving that's materialized as a result of a piece of work, or headcount capacity changes. But a lot of the others where you're talking about driving real strategic value, I think is in some senses a bit of a waste of time in trying to actually put metrics around it, because
exactly. Nothing could be measured, by standard metrics.
It will be a contributing factor, but actually to work out which component it drove and what the output was, I think is a very
I think it's a very good question, but I don't think the metric needs to apply to us. I've been in this industry for a long time, and I've worked with a lot of very bad-tempered traders, and in very bad-tempered moments, I have said to a couple of them, you will get exactly the technology you deserve, based on how much effort you put in, how much time, how much creative thinking. And I think the metrics need to apply to some of our business heads, because we will provide the ideas and some of the technology, but they will make the money out of these ideas.
Second and last question is from Amoo Sood, and it's directed to Simon. Are investors now paying more attention to hedge fund IT infrastructures, and do they base that information as a factor to influence their investment decisions?
I think they are, but there's a certain expectancy of what they're after, whether that's around business continuity planning, whether it's around outsourced arrangements, in-sourced, the development mix. But I think it's as I said earlier, I think ultimately, if as a hedge fund, if you can't actually deliver uncorrelated alpha to your investors or potential investors, then I don't think having the best infrastructure in the world isn't going to get you a seat at that table. But once they've actually looked through and you can deliver and demonstrate that performance, then I think it absolutely becomes a key part of that investment decision, along with the overall operational due diligence that they'll be carrying out.
Thank you very much to our panel.
Yes, one thing that if you have any questions, we have blog and Twitter, Amoo tweets. So if we haven't answered all of them, just feel more than welcome to tweet us. Amoo tweets. Yeah,
Great.
Thank you.
Okay, thanks again, everybody.